please just mute your cameras. Mute your microphones as well, please, so that we don't get any background noise. All right. So as I said, today is going to be just the SMSF basics, the why do it, how do it, and then do some questions and answers at the end. So myself, I'm sure you probably all know who I am, so I won't go into great detail, other than to say I went to university for way too long, 16 years and more. And yeah, I've done nothing but financial stuff all my life. Disclaimer, this is not legal, accounting or tax or investment advice. Please do take professional advice or do your own research. Okay, so this is just a caption that I just love about when a meteorite was heading towards the world in a movie. I think it was Deep Impact or something. The question was posed, how would the governments of the world prepare the people for an extinction level asteroid heading for Earth? The answer is that they wouldn't. So how would the governments of the world prepare the people for the biggest economic collapse in the history of the world? They wouldn't. And I won't go into it on detail today because I've done it on plenty of other videos that are on my YouTube channel. But I believe we're heading for a very, very large crash in the stock market and in the economy in general. So with that in context, if the economy crashes, is superannuation safe? For those that are in defined benefit pensions, which is a lot of the government pensions, you're safe as long as that provider remains financially viable, as in the government usually, or the state government. As long as they're still financially viable, your pension will still be there. We certainly have seen other countries where pension schemes have just been wiped out. Not saying that will happen in Australia, but it could. But if you are in a defined benefit pension, there's nothing you can do anyway. You just have to leave it there and hope. Okay, so the main superannuation that we talk about when we're talking about self-managed superannuation is what's known as an accumulation account. Accumulation account is basically everything that's not a defined benefit account. It is only safe as long as the share market is safe, because a lot of people don't realise that your superannuation sitting in the schemes out on the market are generally all in the share market, or 85 to 90% in the share market, unless you have specifically chosen otherwise. So therefore, is it safe? As I said, I believe we're possibly about to have a very large economic crash. I believe it will start with the share market crashing. The share market has already been in what we call a bear market, which is it goes its little ups and then it goes down further than the previous up. So it's slowly making its way down. One way to protect yourself against that share market crashing is to contact your existing superannuation provider and move your account to cash. So once again, this is not financial advice. This is something, my opinion only on what's coming, and it's up to you to make that choice to decide to move to cash. Once you've moved the super fund to cash, is it safe then? It is safe as long as the provider doesn't freeze that account. So say, for example, if too many people start moving to cash or withdrawing or moving to SMSF, the provider, the superannuation scheme on the market, they start to have what's called a liquidity problem, where they're running out of liquid cash that they can pay out. In times like that, they could freeze that account. Okay, so I do have to warn you that if you take your super out of the share market and it does rebound, you may miss out on that. Unfortunately, that's just part of, I guess it's like a gamble. Do you stay in and hope for some growth, or do you get out and save yourself from a major crash? So I'm not a gambler. I'd prefer to save myself from the crash than hang in there for some gain. But if you speak to a financial planner, they will tell you to stay in the share market. That's what they get paid for. That's how they get paid. They want you to stay in the share market. Then you can protect yourself against. Some people are saying, Jim Rickards and Robert Kiyosaki are some of those that are saying that there could be an 80 to 90% loss on the share markets. So that's not me saying it. That's financial professionals that have got a fair bit of credibility. I've followed them for many years. But at the end of the day, it's your super, your choice. You need to decide what to do. Someone said the presentation is pixelated. There's nothing really I can do about that. It's just a straight PowerPoint on Teams. So more about your superannuation. Is it safe? And what can you do about it if it's not safe? If you're over 60 and retired and in an accumulation account, you can simply withdraw it all. And I have that question quite a lot. I'm 60, retired, can I just pull it all out? Yes, you can, but there are reasons for keeping it in. That is, if you pull it all out just because you can, you may not be able to get it back into super after this is all over. There are some very strict contribution limits. An alternative to pulling it out is to moving it to the self-managed super fund, where you choose your own investments. We'll talk about SMSF quite a bit shortly. So what are the safest investments right now? So I have spent 30 years doing nothing but working in the finance industry, property, shares, super, you name it, I've done it. And over the last 2 years, I've just spent a lot of time banging my head against the wall, thinking, well, what is safe now? And this, once again, is just my opinion, not what the financial planners will tell you, but I don't believe the share market is safe right now. Therefore, your superannuation is not safe if it's in the share market. Cash in the bank, I talk about that in another presentation, but no, confiscation and inflation, we've all seen the trouble we're having with the bank accounts at the moment. Property, I was saying yes, but that is crashing, seems to be crashing now. It generally holds value in inflation, but because they're raising the interest rates, property has done its largest decline in the history of Australia last month. So property's not looking too good either. So precious metals, it's some people think I'm obsessed with gold and silver. Maybe I am, but it's the only thing I keep coming back to that is safe. It's going to hold. It generally holds value in inflation. It's a physical asset, etc. I don't get paid by anybody to recommend gold and silver. I have my preferred gold and silver dealers, but I have said no to any referral fees because I want to be able to say my truth without being biased by who's paying me. So the SMSF is there where it comes into its own because you can use the SMSF to invest in precious metals and property. More about that a little bit later. So with precious metals, if you do buy them, I suggest you buy the actual physical asset, not shares in gold companies. Also possess the asset. Don't leave it in the vaults where it could still be confiscated, or cyber attacks is another big issue if it's left in a vault. How to buy it? For anyone who hasn't done it, it's actually really easy. Dealers such as Ainsley Bullion and As Good as Gold, and also use ABC Bullion. You set up an account in 5 minutes. If you're buying in the SMSF, you just need to make sure it's in the name of the self-managed super fund. You place your order, pay for it through internet banking, and go pick it up. It's actually that easy. So more about precious metals. No one is licensed to advise on it. If you ask a financial planner about gold and silver, they will talk you out of it or say no, or because they're not licensed to advise on it. They actually can't advise on it. No one can. So all I can give is what I call my rule of thumb. I personally choose 70% gold, 30% silver. Other advisors say 50-50. It is really up to you what you feel good with. There is a lot of historic research and evidence behind gold and what it does in an economic crash. Silver, on the other hand, people are saying the market is very depressed, and it is, so that could rebound very quickly. It's really up to you what you choose on that. And I do say store at home, not in the vault or in an allocated pool. Insurance is not necessary. You can get insurance if you want. It's incredibly expensive. So it's up to you whether you insure it or just I prefer to spend my money on really good safes and really good security systems rather than the insurance, just because it's so expensive. People are worried about if you've got gold and silver in an SMSF, will the auditor come and look at it? No, the auditor doesn't do that. The auditor just wants a photo every year to show that you've still got the gold and silver. So now, why self-managed super funds? SMSFs are very simple. Some people say they're very complex, but I've been accounting for them for over 20 years. The way we have set up our processes, our aim is to make it very, very simple for you. You get total control of your super. You take it out of the online system, you put it into a bank account that you control. You also may pay less fees to managers if your total balance is more than 200,000, and that's total combined balance of all the members. An SMSF can have 6 members. So once you're over that 200,000, I can show you how you probably paying less fees, because the super funds out there on the market, on the statement that they give you, they're not disclosing all the fees. They're only disclosing their administration fees. There's a lot of fees hidden in the underlying investments. And to say that, most other funds charge between 1 to 1.5%. That's a typo there. It's 1 to 1.5. So if you calculate that based on your current balance, you can see how much that they are probably gouging from you. The main thing is you decide where to invest, and that's the key at the moment. And that is why SMSF it's absolutely exploding in terms of the amount of people doing this, not just through us, but through other providers, is that people have had enough. People have had enough of having their money in the systems where you have no control over it, where the government is now starting to influence it. The government is now starting want super invested into sustainable housing, read smart cities. Get it out into self-manage and you decide where to invest. You can also move your money quickly. So I did see a little chat box pop up, which I'll come back to the questions about, is an SMSF bank account any safer? No, it's not. But the point is, once you get it into the SMSF bank account, you move it into something else like gold and silver, or you can leave it there for a while. But the point is, if you decide to move it, you can do it very, very quickly. It's literally internet banking. So if everything starts crumbling really quickly, you log on and you move the money, say, into gold and silver. So what can an SMSF invest in? Property, share market managed funds, gold, silver, bonds, term deposits, crypto, other like antiques and artworks and collectibles, but do be careful with that and speak to the accountants before you do that. So very, very broad range. Anything that is really a good investment, an SMSF can do. To make it clear, there's one main rule. So when you're looking at an SMSF investing, one main thing you need to question yourself: is that investment for the sole purpose of my retirement? If not, you can't do it. So that just applies across the board. So people have asked me really crazy questions like, can I invest in a Harley Davidson or a yacht because I'm going to use it in my retirement? No. Harley Davidson and yachts are for your recreation, not your sole purpose of retirement. Same with property. You can't live in a property the SMSF buys because that's not for the sole purpose of your retirement. So yeah, as I just said, you can't live in a property bought by the SMSF, but there are a few potential options, like renting to a third party like a friend, and also renting to a business. You can do that. So your SMSF can buy a property and rent it to your business, to run a retreat, a farm, all sorts of business. So how to set one up? The very first thing you need to do is obtain your director's ID number. We can't do that for you. You need to Google director's identification number and follow the steps. If you have MyGov, it's a very easy thing to do. So that's the first step before you can do anything. Please don't tie up my staff asking how to do this because we can't do it. I do jokingly say, though, it's really not a funny joke. Though I'm an accountant, I'd like really dry, stupid jokes. But I do say that if you can get through the director's ID number, you can get through everything. So, or get through everything to do with SMSF. So it's very easy on MyGov if you've got it. Otherwise, you can call them, but do be prepared for setting aside half a day to call them, because I've heard lots of reports that they don't even answer the phone. There's no way of leaving a message. If they do answer, you get put on hold for an hour and then hung up on. Really not a good system to try on the phone, but if you don't have or want MyGov, that's the next best option. You can do a paper form for those that really want to have no digital footprint. You can do it on a paper form, but it does take a month or so. This is the number one question I get: digital ID. No, it is not a digital ID. It's a director's ID. It's just another number. I know people are objecting to that and saying they don't want to do it, but when I've done it myself, I had to give them my passport and my driver's license. Then the numbers, they already know that. We're not giving them anything more than they've already got. If you really don't want the director's ID number, we can do it with personal trustees. We really strongly recommend you don't do it that way. I've been doing this for 20 years, and for 20 years we have said don't do it that way. This silly little number doesn't change that recommendation as far as we're concerned. However, we've had in the 500 setups we've done in the last 2 months, we've only had one person want the personal trustees. We've done it if you really want it. So once you have the director's ID, you can go to our website, freedomffs.com.au. So freedom, F for Fred, F for Fred, S for Sam, freedomffs.com.au, and there's simply an order form on there now. Get your director's ID first, because you can't save that order form. You need to complete the whole thing all at once, including your director's ID number, and then hit submit. So how to set it up? We do it all for you once you have filled in that form. We establish the trust and appoint the trustees. We obtain a TFN and an ABN. We set up the bank account with Macquarie Bank. You can choose your own bank account, but it's a lot quicker and easier if we just use Macquarie. No reason for Macquarie other than they're a really good SMSF and a fee-free bank. You're the signatory and controller of that account. That is one of the most important things. There are other providers, financial planners out there that when they set up an SMSF, they give themselves authority to access your account. Don't do that. For 20 years, I have made it mandatory that we do not have any access to the accounts. Obviously, for fraud reasons, we don't want that access. So once this bank account's open, we roll over the funds into the bank account, and you go and buy whatever you want to buy. It's actually as easy as that. I should say it's not that easy. We do a lot of work in the background. But from your end, you're sitting back, signing things as we send them to you, and then we do it all for you. You can name the SMSF anything you want. So that's a common question. Most people use their surname. For example, mine is Smith Family Super Fund, but you can name it whatever fancy name you want. It's currently taking 6 to 8 weeks. That's not us that's holding it up. I've got a team of 12 people now pumping away at this. This is how long it takes with the tax office delaying us, the bank delaying us, the outgoing fund delaying us. The fee is $2,200 to set up, payable from your SMSF. The annual fee is 1%, capped at $3,300. So once if the super fund's balance is over 300, we cap our fee at 3,300. Other than that, it's lower. It's 1%. SMSFs can have 6 members, usually partners, maybe adult kids, maybe siblings or parents, and sometimes groups of friends. Is there a minimum balance for an SMSF? No, it's your choice. We used to suggest in the olden days, like 3 years ago, that the balance would be 200,000 or 250 to make an SMSF viable, but now it's different. people are doing this for different reasons. They're doing it to get it out of the system. So we can do it for less. The tax office have no right to say you can't do it just because you've got a small balance. So, yeah, as I said, most are doing it to remove their money from the system, avoid a share market crash, take control and have freedom. But you do need more than 50 to 80 to make the fees even justifiable. So the easiest way, if you haven't got enough balance, is to find some like-minded family, friends, and join together. I mentioned a tax office audit in some of my documents. It is not a personal audit. It's just an interview as to why you're doing an SMSF. Earlier on in the year, the tax office was doing a full-on hour-long interrogation. We've alleviated that a bit because I fought back hard and asked them what right did they have to say yes or no to an SMSF setup. What right did they have to deem that my client can't have one? So since then, it's been a lot softer. It's often just a phone call and a chat, and I can prepare you for that. And it only happens if your balance is, say, less than about 100,000, or if you've got any other compliance issues in the background, like you're late on your taxes, you've got a tax debt and things like that. And we will guide you. If you get a call from the tax department, I say don't answer any questions on the spot. Line up a time to talk to them and contact me, and I will give you a little bit of training on what to say. And we've won every argument so far, which I'm sure someone from the government is going to be watching these presentations at some stage. As I said, they do not have a right to say, no, you can't have an SMSF. So we have fought back and we've won. They've got no right to stop you. People ask me about insurances. We encourage you to keep your current fund open with your insurances, because insurances can be a nightmare to get. So we'd hate for you to close that account and lose your insurances and then maybe not be able to get new insurances. We will have a financial planner contact you after the SMSF is all set up to talk to you about your insurance and decide whether you should move it from your existing fund or over to your new fund. So why use us? Freedom Financial Solutions, FFS. There's another acronym that FFS might stand for. And yes, that is a deliberate pun. But Freedom Financial Solutions, we are like-minded. We're non-profit. Everything, the profit, when we finally make one, will be donated back to the freedom movement. And we will fight for you. So this isn't just a job to us. This is a mission. Everybody I've employed is from the freedom movement, and we are on a mission to help as many people as possible get out of the system. And we're humans, we're not online. We try and answer as many calls and emails as we can, even though we are completely inundated. Forgive us if we don't get back to you straight away. So who is Holistic Financial Solutions? So Freedom Financial Solutions will do the setup of the SMSF. Then we will hand your file to the accountants in Holistic Financial Solutions. That was set up by me over 20 years ago. I was the founder and CEO up until recently, when I've stepped down, simply to protect Holistic, so I can be out there saying my views and not getting them into trouble. I'm still closely linked with them. The staff still sit here with us and I still communicate with them. So they're fantastic accountants. You can choose your own accountant, but you can always just stick with us. So very quickly on property, how to buy a property in an SMSF. One SMSF with 6 members can buy a property outright. That's probably the most common way at the moment. One SMSF with 6 members can also borrow to buy a property. That's what we definitely were doing for the last 10 years. That's the main reason people did SMSF, was to borrow to buy a property. But now with interest rates escalating, I also am hesitant to recommend borrowing in these current rate rising environment. Multiple SMSFs can also join together and buy property in a unit trust. That is best explained by this diagram. So the unit trust can buy the land, multiple SMSFs and individuals can join in. So with that structure, you could imagine if there's multiple SMSFs, let's say 20 SMSFs, you could raise a significant amount of money, 1 million, 2 million, 3 million, to buy land. And we are helping people do this all across Australia as well, because this is, I think, part of the way we need to move forward for the future. The advantage of the unit trust is that the individuals can be involved as well. So it doesn't have to be all people with SMSF. Unit holders can come and go. So once you bought the property in the trust, if someone wants to sell out, there is definitely a way of doing that to another unit holder. It adds an element of separation between the trust and the SMSF. That can be important for issues like living on the land, which I can't talk about in this session. It's a whole session on its own. Okay, there is our number, and you are best off emailing me rather than calling. We're struggling to keep up with the calls. But I'm going to now take questions, so I'm going to stop presenting and look at your questions. Okay, you can put your cameras back on if you now wish. Oh no, I'm still recording, so if you don't want your face, don't put your camera back on. Okay, just having a quick look. Yeah, I covered the bank accounts. No, they're not any safer in the SMSF. You're better just to not leave too much money in that bank account. We spoke about the DIN. Property as a group, I just finished with that. Yes, so we are definitely able to help with setting up unit trusts and that side of things. We're not legal advisors. I do have a good conveyancing solicitor that does Canberra and New South Wales, and another conveyancing solicitor that does Queensland. Love my client protection attitude. Absolutely. It's part of what I'm here for. Didn't mention in the beginning, but I've got a master's degree in tax law and spent 11 years as a fraud investigator for the tax department. So when they decided to say my client couldn't have an SMSF, they came up across the wrong person. If we set up a unit trust, do all members pay 1%? The 1% is for the whole fund. So the 1% is whether there's one member or 6. So that's why an SMSF can be more cost effective with more members. But don't rush out and add a whole lot of members just for that, because it can get more complicated. Money's involved. People, I think health and money are people's most sensitive issues. And when you're talking money, if you've got people in an SMSF, they join together in the investment. I run another session where we talk more advanced concepts to explain that. You've got to select the assets together. So make sure you only come into an SMSF with very like-minded people and you all want to do the same thing. Kimberly, yep, so we amalgamate all the super funds in the process. Our setup fee involves 2 rollovers. So if you've got more than that, we charge extra, or you can actually do the rollovers yourself once it's all set up. That's all the questions, I think. If I've missed any, type them back in. Having trouble with my scrolling button. Sophie asks, can I buy a property while I'm working, then live in it when you retire? No, not while it's in the SMSF. But once you're over 60 and retired, you can transfer that property out of the SMSF to yourself. You will pay stamp duty, but yeah, you definitely can do that. I can see Kimberly's busy typing, so questions probably coming through. Interested in the Parents with Questions farm concept? Yeah, absolutely. I'm looking at the Sunshine Coast one. I think it's a fantastic option. I think it is the way of the future, that we join together in communities. And a Parents with Questions one, you can't live on the farm. It is for food, growing, but it is viable for SMSF. They've set up a structure that can make that work. So the good thing to do is set up the SMSF, get everything rolled over and get ready, because it's a 6 to 8 week process. So people are coming to me saying that they want to invest in Parents with Questions in 2 weeks' time. and they want to set up an SMSF now to do so, it's too late. Get it all set up and ready to go so that when there's an allocation from them, you're ready. Yeah, and when you're ready to do that, you simply pay cash out of the Macquarie bank account to the parents with questions. Yeah, Kimberly says, grateful that what we're doing. Yes, it's been a hard road. I've been absolutely and utterly exhausted, but I'm getting some balance now by doing these group sessions rather than 30 one-on-ones every day. I started to break down, and luckily I recognised that in time. Yeah, and we've all got our roles to play. We really have medical people getting together, food people getting together, and us financial people have got a role as well. Sophie says, can you avoid paying stamp duty? No. If you're going to transfer that property out, yeah, you need to pay stamp duty. Just had someone admitted they probably got their time zone wrong because we're almost finished. Jackie says, after setup of the SMSF, do we take care of the audit management? Absolutely. Well, my sister firm, Holistic Financial Solutions, does. When you say comfortable to 100% take control, no, you're better off leaving it with accountants. WFS pays $50,000 a year just for the software we use. And the accountants there have been doing it for 15 years. They're SMSF specialist accountants. When I say it's really simple, it is on your end. The SMSF law is that thick, and the penalties are 50% of your super if you breach. So best to let the accountants look after it. How does the government bank guarantee work with an SMSF? Yeah, I have got my own opinion on this. I could be wrong, but I don't believe the government bank guarantee is in effect anymore. It was introduced back in the GFC to appease Australians. The bail-in legislation was introduced well after the GFC. I have read most of the bail-in legislation, and I can't find anywhere in there that protects the 250 per account. So I think the bail-in legislation has superseded that government guarantee. If it does still work, then the bank account is guaranteed up to that 250 if it's still there. You can't insure. If you do insure your gold, yes, the SMSF will claim it as an expense. No problem. All of the expenses to do with running an SMSF and purchasing the asset and maintaining the asset is all out of the super fund. So, for example, if you had a property, the super fund will pay the rates, the insurance, the expenses. The super fund can even buy the safe, if you like. Okay, good doctors and nurses. Yes, we will need them. And they need to come and join the communities. We've set up a community in the Gold Coast. We're just starting on our second one now. And yes, we have doctors that have come into the community. Ex-doctors, should I say. Yep, so someone said 3 kids. And that's on the binding death nomination. Yep, look, make it 100%. Just pick your favourite kid. Have 33, 33 and 34. Or 33.33, 33, 33, 33. Just give one little more percent. It has to be 100%. Otherwise, there'll be money sitting in the fund not allocated. Sophie says, is there another way of not transferring the property? Look, there is, Sophie, there's ways of doing it, but I'm not going to say that on a live broadcast. You can certainly talk to me about that. Someone needs to mute their microphone. Okay, does the setup fee include the creation of the corporate trustee? Yes, it does. Purchase property with other funds. Can I add to my loan once I get my SMSF? Sophie, you probably need to talk to me about that one. That's convoluted. There are ways of doing it, but have a private chat with me. When you're coming to buying property, if you're going to have other people involved and trusts and mortgages and all of that, that's definitely a need for a personal consult. Is there a government clause that prevents you withdrawing into a super SMSF. No, if you haven't been contributing for the past 2 years, no. You can roll over to SMSF whenever you want. They cannot stop you. In fact, when you send the rollover request to the other fund, I believe they have a legal responsibility to do it within 7 days. However, they get around that. It's 7 days within receipt of them getting the 100% correct paperwork. So they will use any excuse they can to say, you haven't ticked the right box, your license, your address has changed, anything to hold that money back. We know how they work, and we know how to make sure that the rollover is most likely going to happen, but there's sometimes are still hiccups. You choose to keep 6,000 in insurance, yes. Once the insurance is set up with the financial planner, very easy to then close the account. As I said, you can do that yourself, or we do it for 220. How do I get in touch with the doctor in the Gold Coast? Probably email me about that separately, and I'll ask the doctor if they're willing to talk to you. How do you find out more about the communities? Absolutely, just email me. I then put you on my list so that when we've got new communities coming up, we'll let that out to you. So interesting about the communities, we got the first one off the ground only last week. Very exciting. And I am so tired that I just wanted to sit back and do nothing else except go and live on the land. But I got a really strong sense that I had to keep going, as much as I don't want to. I'm so tired. Anyway, and then another one has come up literally within the week of settling on the other one. So we are running with that one now as well. And once we get these models perfected, we do hope to roll out to other states. So do email me if you want to be on the email list for those communities. Can you set up the SMSF with one member now? Yes, absolutely. We can join others later. We do charge extra to add them later. So put everyone that you want in the beginning. But yeah, if someone comes up later, you can put them on. I think I've missed a question. Kimberly says, My Place. Absolutely. I've heard of My Place, know all about that. Director ID cost is free. Kimberly, I don't know what you mean about the dog. You can take the dog. Can the dog live on the property? Probably not. Yeah, the favourite child. Okay. Yep, me too. I shouldn't say that on live. My kids will kill me. All right. Can you set up an SMSF? I've said that. Co-Vision, absolutely. I'm involved with them as well. They're looking at communities, and I'm happy to help them. And the great thing about what's happening is we're all collaborating. Co-Vision, Parents with Questions, Monica Schmidt's group, Reunite Democracy. We're all coming together and working together, which I love. There's no egos in this. I'm not saying my community is better than anyone else's community. We've all got different options available. With the communities we're doing, you can live on the property, whereas Parents with Questions, you can't. So they're sending clients to me that want to live on it, and I'm sending clients to them that don't want to live on it. In the end, I think that's a good time to wrap up, because Kimberly's just said, we all need to join, and in the end we will win. And that's why this SMSF for me is a mission. It's crazy. I've been in the SMSF space for 20 years, as well as property, mortgages, tax, accounting, but never would have thought, well, in the last 20 years I've questioned, why in the hell am I doing this? I don't feel like I'm an accountant. And now I'm here doing this for everybody, and I just really feel that that's what I've spent the last 20 years preparing for, is to be here. So, and we've all got that role to play. Spread the message. We are taking on more clients. We are just putting on more and more and more people. It doesn't matter that they're inexperienced, because it's just the SMSF setup is just an administrative process. I do have technical accountants, including myself, that handle the higher level technical questions. So, all right, with that, I will wrap up, and lovely to meet you all, and we'll speak again soon. Thank you, everybody. Bye-bye.